Good afternoon, my name is Peter Darsky and I would like to welcome you to my short video about FHA loans. So when we think about FHA loans, we basically consider situations which require more flexibility on the lender's side. So if your credit is less than perfect, if you have lower income comparing to your monthly obligations, and if your down payment is somewhat small, then FHA is probably a program for you. So FHA or federally insured loans, there are three important benefits and there are a few drawbacks. So let me start with FHA loan benefits. Most importantly, if your credit is in the range from 620 to 660 points, it's a FICO score, which can be obtained from your credit report history. This is the ideal range for you to apply for a FHA loan. This score might be just a little bit too low for conventional loans, and most likely you'll be penalized for credit score which is considered a little bit lower. But with FHA, there's no problem. You're not gonna get any penalty for such a score. If your score less than 620, let's say you're in the range 580 to 620 FICO score, you can still do FHA loan, but then you're gonna also have an adjustment to your interest rate. Typically, interest rates on FHA loan are always lower than conventional loans, and usually they're lower by 0.25% to 0.5%. And if your score is 580 to 620 limit, that rate's gonna be higher. Another thing to consider about FHA is that you are required to put very small down payment. So if you have 3.5% down payment, you can already apply for FHA loan. You can also have your closing costs paid by a seller. There are some contributions which are acceptable. So instead of asking for a huge discount on your real estate contract, you can always ask for $2,000-3,000 closing cost credit to cover all your closing expenses, and that's one of the good things that you can use on an FHA loan. Another thing that is very helpful when you apply for a loan is when your income to debt ratio is somewhat higher. So basically, when your monthly obligations, car loans, credit card, student loans, once they're added to your proposed payment for the house and property insurance and mortgage insurance and homeowners insurance, on the monthly calculations, if this all is added up together, you can qualify for FHA loan as long as your debt to income ratio is under 55% of your monthly income. So if you earn approximately $10,000 paid per month, you are permitted to have total monthly debt of $5,500. If that's your ratio, 55%, you can qualify for a loan. So those are like the main important considerations when we help you decide whether you should apply for a conventional or for FHA loan. Another very important thing, which is a benefit of FHA loans, that if you had a significant situation in the past, such as bankruptcy, Chapter 7, where you had a full liquidation of all your debt, you have a fresh start, or if you had a short sale, something from the past, let's say from the previous recession or crisis that we had between 2009 and 2011, if you had a short sale, you can actually apply for a loan if you wait 2 years from that event. If you had a foreclosure, you need to wait 3 years. But these seasoning or these waiting periods are a lot longer on conventional loans. In some cases, you have to wait 4 to 7 years. So that's another benefit of FHA loans. When we consider drawbacks of FHA loans, typically these properties for which we apply for FHA loan have a lower loan limits comparing to conventional loans. For instance, in 2017, your typical single-family residence loan limit on conventional loan is 22,000 and some change versus 360,000 on FHA loan. So this is one of the consideration. From January of 2018, for example, when approximate time when this video is made, a proposed loan limit for FHA is 458,100, and most likely on an FHA loan that limit might raise too, but it's yet to be seen what it is. So that's one drawback. Another very important thing is that whether you put 3, 5, 10, 20 or 30% down payment, there's always mortgage insurance on your loan, and there's no way around it basically. So you know, if you we allow for higher risk situations, but basically this product has to be always insured, and it's insured against those additional risks, I guess, that conventional loan will not agree to. So you know, it's not the biggest problem, because let's say if you purchase a property with 3.5% down payment, you can wait 2, 3, 4 years, remodel it, and or perhaps the market's gonna go up by itself, and then you can just do a regular refinance. And in this time you may actually qualify for conventional loan, because maybe the foreclosure, maybe the short sale that you had, or maybe the bankruptcy is going to reach that critical period which is required by conventional loan. Another drawback, and I guess this is the last thing I can mention on FHA loans, that it gets tricky on some projects, let's say townhouses or some most likely condominiums. What you see is not all projects are approved for HUD agency. So Housing and Urban Development Agency never was petitioned by association that kind of controls that project or association to apply for these you know, FHA loans. So if they didn't go through a process, the FHA financing is not going to be available. I would say it's a very frequent situation in condominiums. There's a lot of condominium projects which are not approved for FHA financing. Association can apply, and probably 2 or 3 weeks, it's a waiting process to get the project approved, but a lot of them, they did not do it, don't want to do it, or they have some of their own reasons not to do it. So those are the, in essence, those are the most important highlights of FHA loan, and we will help you decide which one is better for you. But also at the same time, I guess you got more familiar with all that. Thank you for your attention, and please watch my other videos.